Charles. What's his name?
What'd you say?
Something
Are you
about
being a
his
fucking
name.
wise guy with me? Huh?
I'm sorry.
What did I tell you?
I
What did I
apologize.
tell you? What did I tell you? You don't buy anything, you hear me? Don't buy anything.
Hello and welcome back to the channel. I told you that the Fed Chairman Jerome Powell not on your side anymore. And I pointed out to the sentiment change in the market in the first video, drifting from the growth and high valuation name to the value name, aka Warren Buffett kind of name. So those who didn't listen and bought the dip in the previous days, they got whacked, slaughtered yesterday. So what happened yesterday? Everyone was expecting Fed Chair Powell to be dovish, but he came out hawkish. Plus he pointed out that he will take action sooner than planned fight inflation using his tool. Right away we saw the 10 years yield blasting higher to the very important level of 1.7%, at a level which the high multiple names and overvalued stock start selling aggressively. Not only stock, ETFs such as Cathie Wood, ARK Invest got whacked. So let's take a look at the 10-year yield government bond. We see that the chart break the 1.7% resistance and blasting higher. This means if you are heavy on growth stocks or Cathie Wood kind of names, you need to buy options via put options to protect yourself from more downside. If you want that I share some protection strategy, write in the comment below. The 10-year bond, after the fact that it crossed the resistance of 1.7, it's heading for the second resistance of 1.77%. If the chairman of the Fed, Jerome Powell, he will assess that the bleeding in the stock market is excessive, maybe he will resume his asset purchases. But in the other hand, if he will assess that the risk from inflation is greater and we reach this level, there are no rescue from Jerome Powell, we should expect that the yield will blast through the 1.77% level, and that will create a massive flush down on the stock market. Maybe we will see a correction of 10%, maybe more. With that being said, let's start with the market coverage. The Dow Jones is down 392 points, or a decline by 1.07%. The Nasdaq is down by 522 points, or a decline of 3.34%. The S&P 500 is down by 92 points, or a decline by 1.94%. Let's take a look at the heat map. Oh, what a bloodbath. We see red all over the board. Technology down, communication down, consumer cyclical down, auto manufacturer down, financial down except of the value stock. We see Berkshire Hathaway is on the green side, Intel value name on the green, telecom service such as Verizon on the green side, healthcare, Pfizer and Johnson and Johnson on the green side, consumer cyclical, Coca-Cola, Procter and Gamble on the green side, utility, energy, ExxonMobil, Chevron on the green side. So basically, in this kind of market, the value name, the old kind of name, those who will perform during this kind of markets. Let's move on to the chart analysis, and we will start with the SPY, where a massive flash down. Let's take a look onto the 30-minute time frame chart to have a better idea. And here we see the massive flash down right away around the FOC minutes. So as we see here, the SPY chart was printing sideways until Jerome Powell showed up and delivered the news that he will be raising interest sooner as expected, and we see a massive flash down in the SPY. We went through the 470 support. The next stop, we will have a resistance around this gap of 454, 455. Let's put it on the graph. 455.18. If this support will not hold, the chart can crawl down until the support of 435. Let's take a look at the Qs. The Qs here is worse looking than the SPY. The fact is, most of the technology and the high multiple name are on the Qs trust of the ETF of the Nasdaq. So as we see here, we reached the first resistance. We reached the resistance at 379, and then we got rejected and a big flash down to the downside. Let's check the IWM. The IWM doesn't look good at all. The chart is flashing down heavier than the SPY. We can see that by the MACD crawling down heavier, and the confirmation with the volume candles. We see that the RSI is reaching the oversold territory, but things doesn't look well for the small caps. Let's check the VIX on the 4-hour time frame. We see here the spike in the VIX. It's an initial spike. Here we are sitting now on pre-market, and the VIX is at higher level, $20 pre-market. If the pain will resume on the SPY, we will see another leg up in the VIX, and this is confirmed by the crossover on the histogram of the MACD, spot on as we explained many times before. And same thing, we see that the RSI is building momentum to the upside. Let's take a look at the Dixie daily time frame. Let's switch on to the to the daily time frame. On the daily time frame, we see that we have a bull flag that, in my opinion, will play to the upside. Let's check gold. After the spike in the 10-year yields, we see that the gold got rejected on the most important resistance of 1834, and at the moment is continuing his way down, flashing down. Okay, let's move on to Apple, and we see after the fact that Apple, they reached their goal of having the headline of the 3 trillion market cap. Apple is crawling to the downside, flashing down. Tesla, same thing, is flashing to the downside. Worth noting that Elon Musk, Jeff Bezos, they both sold billion and billion of dollars of their stocks. The sentiment after the fact, these whales they are selling, is always, it's an indication that it's a top of the market if the billionaires are selling. So that's another indication that we reach a top. So basically, if someone has more than 25% gains on his stocks, he should do the same way as, for example, Elon Musk and Jeff Bezos did, raising cash. Let's check Bitcoin. Bitcoin also not looking good. It's big flash down to this support level. If we will not, if the laser beam will not be able to defend this support, it's gonna be a lot of pain in Bitcoin, maybe to the level of the 28,000. It will maybe the chart will flash all the way down to the 28,000. Finally, let's take a look at AMC. AMC doesn't look good, and if we will have another leg down with a confirmation volume, it's game over for the apes. So let's wrap it up with some news. One of the most important news that we got yesterday is the National Employment Report. See that we gained 807,000 jobs. Total employment change in the US non-farm private business sector from November to December. Well, here we can put the most important question: is it good news or bad news for the stock market? We should put in our mind, any good news for the economy is bad news for the stock market. This stock market was accommodated to the quantitative easing during the last 10 years. It's bad news for the market. That means that the Federal Reserve should tighten their monetary policy, rise rates, dry the market from liquidity, to put the Federal Reserve in a position where it has to choose between the economy or the stock market. Finally, what we got on our calendar for tomorrow, we have at 8:30 a.m. the initial job claim. At 8:30 a.m. also we have the continuing jobless claim. At 8:30 a.m. we have the trade deficit. At 10 a.m. we have the ISM service index. At 10 a.m. we have the factory order. At 10 a.m. we have the core capital good news order. All of the above is not very important, except of 1:15 a.m. we have the St. Louis Fed President James Bullard talk about the economy, and we know that Bullard sometimes he tells the truth. If you find what presented on this channel helpful, like and subscribe to improve the algorithm and follow me on social media.